Hello, everyone. My name is Olga Yaroshevsky. It's Hong Kong Blockchain Week, and I'm happy to welcome you to the second part of the great DeFi Day Big Talk, Big Time. So today, right now, we're going to be diving deep into the DeFi ecosystem. And I'm very happy to welcome our panelists today. I'd like to start with a quick round of introductions. So who we have on board today? Sankalp Shangari, CEO of AlgoBitz. Sankalp, we just saw you on the previous panel, so welcome again.
Thank you.
Lisa Tan is the founder and lead economist at Economics Design. Thank you so much, Lisa, for joining us. Oh,
hi.
Yes, you were
nice to be here.
Yeah, thank you so much. Okay, so Anton Golub, founder and CEO of flovtec, joining us from Switzerland. Is that right?
That is correct. And a warm welcome to everyone from Zurich, where I'm hovering on a drone right now. You know, that's right.
Okay, great. And last but not least, Yevgeny Yurtaev, co-founder and CEO of Zerion, ex-Googler, deep thinker on everything related to trading and crypto. Thank you so much, Zhenya, for joining us.
Thank you, and welcome everyone.
Thanks. Okay, so I guess I will start with a round of what I call personal questions, right? So that we can get better acquainted and our audience will better understand what you do and what is your attitude towards DeFi. So I would really love to start with Lisa, because I know that your research work is actually focused on ecosystems. And I saw many of your videos. I really love that. Why DeFi is not a Ponzi scheme. So let's talk about the importance of what you do, first of all, and then about the importance of engineered fundamentals like economics, what you do when building and designing these ecosystems.
Absolutely. So I think the entire world that we're building today, it's taking whatever that we have in traditional world, in the physical world, and moving it into a very decentralized and digital system. And during this process of moving from a very physical world to a whole new digital and decentralized world, we're in this process creating and redefining what the economics is. So think of how we move from metaphysics to quantum physics. We're redefining the entire physics and the science behind all these physical things that we know and physical materials. In the same way, we're doing that with economics. And as we move to this decentralized and digital ecosystems, we're redefining economics that governs the incentive systems, that governs all these different decentralized agents in the system. So what I've been doing was, when I came into crypto, or when I came into the space, I was very excited about the technology and the things that it could bring to us in the decentralized future. It's really, really exciting. But the problem is that a lot of people don't understand the fundamentals driving this change. How do you start building a very robust and sustainable system from the inside? What we see in the 2017-2018 ICO phase was a lot of speculations, a lot of marketing, a lot of hype trying to sustain the growth. But real growth comes from within, just like with humans, and that's how you grow as a person. Ecosystems also grow from within. So how do you start building this very sustainable and robust ecosystem that grows from within? Then we have to go back to economics, and how do we redefine economics? So the research that I've been doing, I read, because I'm an economist, so I read all the way back to the late 1800s. That's where economists, first started, where all these theories came out because of the Industrial Revolution. And then during then, there were a lot of great ideas, but we didn't have the technology, we didn't have the tools to turn that into reality. Today, that's a whole complete story, different story. With DLT, with blockchain, we can take all these different ideas and apply them in the world today and to build the world of tomorrow. So after 2 years of research, I deconstructed economics to its fundamentals. In economics, we don't have first principles like hard sciences, like physics, like biology, but we have fundamental principles. And then based on fundamental principles, how can we apply them in digital ecosystem, in these kind of crypto or DeFi ecosystems, so that we can align incentives, because everyone responds to incentives, and then build a very sustainable ecosystem for DeFi to grow or for crypto to grow in general.
That's very interesting. That sounds like applying a very structural and very, I should call it centralized approach to something that looks like a Wild West. That's fascinating. Thank you, Lisa. Okay, I think we're going to go back to that a little later. Now, Anton, to you. I know that liquidity is one of your things. And so where's the liquidity in the DeFi space? And what are those decentralized liquidity pools and how one learns how to navigate them?
Yeah. So first, thanks to everyone for having me here. And I'm happy to answer this question. And also just for the audience to understand where I'm coming from. I was actually originally in my previous life, like the way I like to say it, I was actually a high frequency trader, a market maker in the foreign exchange markets. And then I co-founded one of the first blockchain companies in Switzerland where we built a semi-decentralized exchange, meaning that atomic swaps were happening on the blockchain, but when the trades were matched, it actually had to be really fast. So that was like the centralized part. Obviously, we're a company, so we had a very clear governance structure, but this is kind of where I came from. And then learned the hard way when you run an exchange, especially when you issue assets or create tokens, is that without liquidity, all of this vision breaks very fast, And this is kind of where I came from. That's why I'm now actually running a company that offers market making and liquidity solutions to digital asset exchanges and token issuers. And also just for transparency, that we have a very close eye on what's happening in the DeFi space. Now, kind of like answering your questions, why do you need liquidity pools and what's the point of them? Kind of what you learn very fast when you try to do market making, when you try to provide liquidity, is that you actually need capital. It's not like just the technology, it's not just smart contracts, you actually need capital to provide liquidity. And then actually this is where this capital is gathered from third-party entities, is actually the so-called liquidity pools. So the automated market making protocols themselves don't have capital because they're just protocols, but they need to gather capital from somewhere, and then they actually do it through so-called liquidity pools. And kind of when they created those liquidity pools, gathered capital from these third-party entities, we can be retail investors, speculators, or even professional entities. What you kind of learned very fast is that works actually. If you have a market-making protocol that gathers a lot of capital from other out of entities, you actually enable a very fast-growing and vibrant ecosystem, like Lisa was actually mentioning. So it seems like liquidity is really, really important when it comes to building a growing and a vibrant ecosystem. But kind of like as soon as that was, kind of when you learn that, then you realize very quickly, but there are certain things that kind of don't work with these liquidity pools or with actually market making protocols in general. And they kind of they're not related to the protocols themselves, but actually to the latency of the network. So what you kind of learn very fast is that the market making should be done very fast. Like I knew when we launched our own exchange many years ago, actually, it has to be done very fast. And that's the extreme opposite of actually decentralized networks, because decentralized networks, in order to keep decentralization, are slow by nature. And this is the blockchain trilemma, how you want to call it, that kind of, if you want to have decentralization, like by nature, the protocol will be very slow. And this is kind of what people realize very fast, like how safe or unsafe liquidity pools are or market making protocols are. They really very fast learn that they're not that safe, if I can call it like that, because you can easily get arbitraged purely due to latency of the network itself. So it's a great idea. I have to say, like when we observed the centralized finance protocols in context of market making or automated market making, these protocols actually show exactly how the future will look like, but it's just way too early. And why it's way too early is because of latency issues, because of not optimal solutions, but it's actually really like a small vision into how the future will look like. But unfortunately, we are way too early for it. So kind of, if I have to be provocative here, even I love decentralized finance, is like decentralized finance protocols or automated market making protocols or decentralized exchanges will not replace centralized exchanges anytime soon, but actually there will be kind of hybrid approaches. And I'm happy to follow up later to explain what are the hybrid approaches, how they will look like, and maybe even hint at a couple of projects that will bring that to life in a couple of months, hopefully.
Oh, yes, please. That would be interesting. And I wonder if Yevgeny has something to say about that. But Zhenya, first of all, can you tell us more about Zerion? Because from my perspective, and I know personally you and your team, you are a big part of the ecosystem.
Yes, for sure. So first of all, Zerion is the ultimate interface to invest in decentralized finance protocols and assets. So essentially, when we started, we noticed how DeFi was a very complicated and very fragmented market. So we noticed that for the users, it was actually very hard to jump straight into any kind of asset. Even using stuff like UnionSwap has a bunch of barriers on the way. So we set on a path to solve this issue and to make a DeFi investment much easier process. And the simplest thing, such as tracking your portfolio, is something that we solve, and not many other companies do that accurately. So that's what Zerion is as of now. So you can come in with your wallet, you can create one, and you can essentially, with a single transaction, invest in pretty much anything that is available in the DeFi space, or at least track everything that is going on with your portfolio. Yeah, and talking about the point of centralized exchanges, I actually do agree that some sort of a hybrid approach is going to emerge, but I would suggest that it's probably going to happen on the layer 2 solution rather than on a completely centralized solution. So I think that is still, in my view, part of DeFi rather than part of CeFi. But yeah, I do agree that when we're thinking about the liquidity in automated market makers is not the end goal. It's just a temporary solution to the problem because of the latency, as Anton mentioned. So yeah, that's. But I would agree in general. Yeah.
Interesting, thank you. I think we'll go back to that again. So I would like to address my next question to Sankalp. If you have anything to follow up with, please go ahead. But my question was to you about the ecosystem of DeFi in China and Southeast Asia, because that has become a thing, hasn't it? After banning the ICOs, China, has paid a lot of attention to the DeFi market. And so how does the ecosystem look there?
That's a very broad question. I'll try to answer.
Feel free to dive into any aspect you think is relevant.
Okay. So just to give you a perspective, AlgoBitz is a tech company, and projects, and having built 4 blockchain companies and sold them last year. And we are building a couple of other very large projects, which we will launch soon. Specifically answering your question, I am a macro guy, so and a student of history. I try to understand economics like Lisa, but I cannot. I'm not smart enough, I guess. But if I look at last 4 or 5 years, I break down this ecosystem into 3 parts. The first was the ICO boom. The second was the exchange or the IEO boom. And now it is the DeFi or the IDO boom. And largely, but the common thread for all the 3 booms has been money making. There is no other use case. There is no other token which has real revenue, real profit, or any company even for that matter. It's the Binances and the Krakens and the Coinbases of the world that have really done well. Few exceptions, of course. There are some revenue making companies, and they will shine out. Don't get me wrong. They are there, and most of them are working hard. It's not that it's just that human greed is overpowering the beautiful tech that these guys are building. And you cannot beat that. Even today, DeFi, everybody is just after the yields. If there was not 100%, 50%, 65% yield, people wouldn't be in it. And suddenly, when there is a Bitcoin recycling, everybody starts to dump their DeFi coins. Another takeaway for me is, again, from these 3 booms, very simply on a macro perspective, in the first boom, Bitcoin and Ether stood out. Everything else kind of failed. I mean, not really failed, but couldn't match the Bitcoin and Ether superlative. In the second boom, the IEO boom, the exchange tokens, the BNBs and the Hobbies and the OKXs and the Q coins did very well. And in this DeFi boom, again, in this bull run, everybody will do well, and everybody is doing well. But eventually, I think if you are not a day trader or a very ardent investor in this, then the safest game is hold your top 3-5 DeFi coins and you'll be just fine. You won't make your 100%, but you'll make your 20% per annum, which is good enough to have a good night's sleep. That's my take.
So, and going back to my question about the ecosystem, right? Because I think you've been talking about this from a customer perspective, but from an inside of the ecosystem. So did Dotcom boom led to an ecosystem involvement? Did Bitcoin boom led to that? Where are the ICOs? It's 2020. What would be the consequences of that DeFi boom?
Yeah, so sorry, I didn't answer your question really. I think the DeFi ecosystem in Asia, that was the question, and today DeFi ecosystem in Asia is divided into 3 or 4 broad categories. The first one is the investors who are quickly flipping tokens, buy low, sell high, or get into the company early, make your 20, 30, 40, 50%, get out. The second kind of investor is the one who wants equity as a piece of your business as well, alongside tokens, because they either believe in the team or believe in the product. The third kind of investors is the narrative investor, the young funds that are coming up, who themselves are building communities for you, and who themselves and actually doing very well because they understand the entire narrative economics behind the human greed that we were talking earlier. And the last part of, I think, investors is largely, I think, the founders themselves who are launching projects, launching funds, or creating sub companies, different companies on back of the new wealth that they have gained. And each one of them is kind of a mafia. That's how it works, with a couple of interlinking people in between and in the right thing to be a part of that gang. Just like Silicon Valley is, I think.
I think we should rename this panel into the economics of greed. All right. Thank you. That's an interesting outtake here. And well, following up on that, do you think that the DeFi space, which is relatively small still, and still a niche trend despite the huge growth and that almost 14 billion US dollars locked in the decentralized networks as of today, almost. And so do you think it's too small and too fragile to be managed on a large scale? I'll throw it to everyone.
I'm happy to follow up on that.
Sure.
And also, I think because Yevgeny kind of also hinted at that, and myself as well, is that I think that, so first, my take is the DeFi space is microscopic, actually. If you take a closer look, it really is microscopic. Yeah. And also the question then is like, what happens when things start to scale? And then actually, either you are in the position to scale or you're not. And then the technology will either crack or they will not crack. And I think any kind of layer 1 solutions will crack, because they are just like, it's been proven that the blockchain cannot scale if you have actually hundreds of millions of users, if that's the end goal. Hence, that's where my point tried to end, is that we will have layer 2 solutions that will actually use the blockchain to actually lock in assets, like Ethereum or whatever. And then on the layer 2 part, they will actually have high performance solutions that will able to cater to millions of clients. Yeah. So this is actually kind of my take. If I have to throw a name, a project that's very interesting that hopefully will be live sometimes beginning of next year was actually Vega protocol. It should be a kind of out-of-the-box derivatives trading venue where you can create futures or options market to trade on demand. And what's kind of very interesting is that, kind of talking about hybrids, we are saying where there will be a hybrid solution on the technology side, but it will be a hybrid solution on the business side as well. So kind of, if people don't understand like how the market making solutions work on the centralized exchanges, there are goals that you have to deliver or achieve as a market maker for a particular exchange when you provide liquidity. What we see at flovtec is that those goals or KPIs will be integrated into the protocol if you want to participate as a liquidity provider or a market maker, which is kind of quite counterintuitive, because you think that the does everything have to go into the code? And it turns out most of it will go into the code. And then I think it will be a super interesting dynamic to see how that will play out, where you have a hybrid between that exchange itself, already decentralized exchange that's on layer 2 side that already actually demands how things should be actually run from a liquidity point of view. Like they will have goals implemented within the smart contracts. Yeah. Now, but, taking a step back, the proof is usually in the pudding. So when things really start to scale, we will see, what will happen. And hence, I would also be interested to hear the thoughts of the other participants. Are they optimistic or not about this scaling when it happens, in the coming period?
I wanted to, sorry, yeah, go ahead.
Okay, I'll just continue really quickly. I think it's very interesting that one of the biggest criticisms in DeFi is that it's all about making money. But how is that different from traditional finance? In traditional finance, it's all about making money too. You look at the derivative space compared to the spot rates of these financial products. Derivatives is it's so much bigger than the spot products. And it's because people make money. And as much as you want to keep saying that DeFi is not good because it's about making money, it's about collateralizing something to be putting in a different protocol, to be used as collaterals, to be used in a different protocol, that's exactly how traditional finance works. So DeFi, as much as we want to say DeFi is very revolutionary, we're talking about revolution as a tech stack, as the underlying technology or the underlying economics principles in trying to align incentives and trying to remove the middleman and spreading the margins a little bit fairer to everyone, but not completely changing what traditional finance is about. Because traditional finance has been working for so many years because people are damn greedy. And if that works, then that will continue to work. Although I completely agree that there are a lot of limitations in AMMs today and decentralized exchange, there will definitely be a migration of both centralized and decentralized exchange. There'll be a lot of layer 2 solutions being out there. And there are a lot of limitations. There are currently quite a number of limitations in the tech stack, but DeFi is still very new. Crypto is still very new. What we're trying to do is to experiment with these new technology, with these new incentives or these new mechanisms to try and see how we can achieve just even a small amount of efficiency increase. Because the traditional finance space is so inefficient that any small percentage of efficiency to the system can create a huge amount of margin that can be unlocked and distributed to everyone. DeFi is more than just making money. DeFi is also bringing other people, the whole, getting everyone a bank account or everyone get access to financial products. That's one of the goals as well. So yes, making money is one of the things which will definitely be there, which is the main driver in the ecosystem, but it's also creating these new mechanisms to allow other people to come in, to allow the unbanked to come in. And I think that's really one of the biggest power. More sophisticated products are definitely going to be created. I really like the idea of decent derivatives, of options, of all these kind of structured products that will be on DeFi to allow other people to use them and to tap into the latency, to resolve the latency issues in layer 2. But the other side is also trying to increase the amount of banks and trying to increase the other people coming into DeFi, because it's all about equal opportunities. With technology allows us to tap into more, try to solve different kind of problems. And I think that's super interesting.
Zhenya, you've been nodding the whole time.
Yeah, first of all, I completely agree with what Lisa said. And I think, so the biggest component of that is, of course, redefining the tech stack. And on top of that, there's actually things that we haven't yet seen in the traditional finance. So stuff like flash loans is just the first example of that. But I am I'm waiting patiently for more things to appear that have no analogs in the traditional finance space. And yeah, on the point of greed, I completely agree as well, because greed is essentially why all the markets work. And it does bring market efficiency. And of course, in the DeFi space, there are not many tokens, not so much liquidity. So it feels like it's all about 300% yields at this point, but it's going to change, I think, over time. And we already see tokens that have some connection to the physical world, makers moving in that direction, to trying to bring more and more collateral from the physical world inside the protocol. And same goes to tokens like Realty that connect to real estate, etc. So we're going to see more and more of that. And I actually wanted to add on the point about is DeFi ready for the mainstream adoption? So what I wanted to say is that I think technology always matches the use case. And I think a lot of people miss that. So when we started with the blockchain, like Bitcoin itself, it was like people were talking about scalability, like they've been talking about scalability for many, many years now. But the problem is that before there were no real use case for that kind of scalability. So essentially, as soon as we see the demand, the supply starts to catch up essentially. Looking at the DeFi space and the ICO space, before there were no use for that many smart contract based transactions. And it's only now that we see, you know, this as a real bottleneck. And now we see like after this many years, now we finally start to see layer 2 solutions becoming more and more realistic. So I think it's just, you know, the investment in the space is matching the amount of use and demand that is coming from the outside. So I think it's all very natural, and it's going to evolve naturally over like the next years to bring more and more users within the system.
Speaking of investments, Sankalp, do you think that it actually relates to the industry growth and to an opportunity for larger scaling?
Well, yeah, I mean, the short answer is yes. I think there's huge opportunities for more and more institutional money to come in, which has just started trickling into Bitcoin and Ethereum for that matter. And as DeFi matures and more technology is built on this, then you will see smart money who always needs more and more avenue for more yields. They will start going into this. Already you hear of so many VCs, you know of so many funds who are starting to put a part of the portfolio into this. Everybody wants greed. Everybody loves greed. So I think the short answer is yes.
Okay, great. Well, couldn't agree more. And speaking of, you know, the directions for the future growth, I'd like to pull up the topic of DeFi and maybe specifically NFT tokens for emerging economies, for emerging countries. And what are initially the prospects for the ecosystem to grow bigger in that direction? Helping people who maybe don't have access to traditional banking, to neo banking, but rather don't want to go back to the fiat world, but rather use digital currencies and not yet regulated DeFi financial tools, right? And maybe stable coins can play a crucial part here. What do you think?
I'll start with this. I think when we talk about NFTs, it's quite important to define what these different NFTs we're talking about. So NFTs are non-fungible tokens, and each token is very unique on its own. It can't be replaced. There are a couple of different classes of NFTs that's going on right now. Just now someone talked about property. So property is one of them. So if you own a piece of land that represents land, then that token can't be replaced with any other random other pieces because each land is unique. So these are some types of NFTs that represents physical products. Then you also have NFTs that represent digital products. So it could be crypto art, it could be some form of in-game items, these kind of NFTs. Then there's a new NFT that has been talked about for a couple of years, but not really implemented yet, which is NFTs for inventions. So almost like intellectual property being tokenized into a token. And there's something that's quite interesting because Yevgeny talked about kind of like a real world application. And this is one of these small little real world applications that could come out soon and trying to revolutionize the way we do things. So if we look at intellectual properties, we look at different kind of rights that are in the traditional, that comes with very thick contracts. If we can turn that into a token and it can be optimized with smart contracts, that could be one of these, much better value add. The other thing that I'm experimenting on the side, I don't know how successful it's going to be, but looking at franchising and licensing and publishing rights and all these kind of rights as a form of NFT. So it becomes a form of calculation to understand how to account for all these transactions that's going on in the digital world, because everything is digital now. So that's a very interesting use case of NFTs. And there's another NFT that is coming up quite strongly. I don't know if you can classify them as NFTs, but these are social tokens. Social tokens, personal tokens, community tokens, tokens that represent an individual. It's a kind of a mix of NFTs because these are individual tokens, but also kind of like a fungible token because you can trade them. And if I have 10 Lisa tokens, each 10 Lisa tokens are kind of the same, but they can have different kind of properties because I as a creator can define them. So these are NFT tokens that we talked about. And when we talk about the unbanked and the developing world, NFTs are not that big in the space yet. I've not heard of that many, but more of the other access and currencies that can get access to these kind of financial products. So that's the other interesting thing. And one of these, so someone talked about MakerDAO just now. MakerDAO is doing quite a bit with the developing space and trying to provide money to these communities, which is very good. One step as we go further is probably to provide insurance for these kind of tokens. Because if you look at why USD is so precious or so valuable, is because USD itself is insured by the central bank, by the Federal Reserve. And that insurance is basically the value add that USD brings to every other individual using USD as they travel. So what will be the crypto equivalent? And I think that will be something interesting. It could be an NFT, or it could be something like a rep MakerDAO or rep DAI that has insurance in there. And that would be quite useful for the unbanked, I think.
That's a good point. Insurance. Interesting. Anyone wants to add to that?
I wanted to add just one example to that. So looking at Argentina, I don't know how is it right now, but at some point, like during this year, the price of DAI was 30% higher than the average price on the market, because for them, because of the controls of the moving money, transferring money across different countries, people wanted to, and also a huge inflation, like something like 49% or around that. Last year in Argentina, people were cashing out into DAI instead. And that's why Makers is big in Argentina. They're trying to help and grow DAI adoption there because of these reasons. So I think over time, people are just going to get more and more exposed to stuff like stablecoins, just the first, as the first use case and as the first introduction to the DeFi space.
If I may add here something, and just because we were now, I think like the elephant in the room was mentioned several times in the context of saying banking the unbanked, bringing in institutional investors, talking about insurance now. I think really, for me personally, and also because flovtec is actually a compliant and regulated entity in Switzerland, is what happens with regulation in the DeFi space, and how does that actually fit the narrative and the vision? A lot of these projects actually, who are, at least their current vision is actually that they are going to be and stay highly unregulated in this environment. And I'm sure, on our side, we talk to a lot of professional institutional investors, also the people who really believe in doing things the right way, and just being and staying unregulated is just not an option, actually. So kind of to be a bit provocative, maybe in this discussion, is actually that the only way for DeFi to succeed and, bring banking to unbanked is actually to become highly regulated at one point. Because I cannot see a scenario where this becomes a mainstream solution for, people globally. And, we achieve our vision, but this stays highly unregulated, kind of a bit of a Wild West that was kind of reminiscent of the early, days of the crypto world. So maybe I could throw it out to other panelists, to say, what do they think about regulation and compliance in DeFi space? Because from the community, kind of hear them saying no, but then from these big investors, they want to get on board. I hear yes, bring in regulation. So I think we have to find ourselves somewhere in the middle, when it comes going forward.
I'll take this one because I'm quite involved in the regulation space. I would say before we have regulations in the local economy, you have to have international standardization before we have localized regulation, where regulation is defined by jurisdiction. Because with standardized international standardization, then it's a lot easier to talk about interoperability. It's easier to align all these different regulations in the different jurisdictions. Now, one of the biggest problems in standardizations or speaking to these regulators is that, how difficult crypto is, right? It's math plus economics plus finance plus technology. Each of these circles are very, very complicated. And now we're trying to overlap these circles together and ask the regulators to get up to speed with whatever that's going on and to get super educated to understand how these things are, and then to forecast 20 years into the future so that we can make regulations today that can be ready for the world in 20 years' time. That's extremely, extremely, extremely difficult. And how, for economists, they are extremely risk averse. Regulators are 100 times worse than that. And it's just in the nature, because people don't like change. Change means a lot of different things. People are going to lose their jobs. And so I completely agree that regulation is needed because you have to protect people who don't understand what's going on. But regulation itself is extremely, extremely difficult. And it will definitely take a long time. We've been trying to do a lot of regulation stuff and to analyze, like to choose a word. He's should, may, must, or wish, or suggested or recommended. Choosing one of these words to add into the contract, to add to the legal paper, takes 1 hour. So changing the entire regulation or creating a whole new regulation for it will take a very, very long time. So, but not having regulation doesn't stop innovation from going. Innovation has to go concurrently with whatever regulators are doing. The thing is, I don't know who should play catch up. And yeah, that's what I want to throw to you guys. What do you think?
Well, my take is that, especially for DeFi, it's such a tiny space that we were talking about earlier. And the regulators is so backlogged with the earlier ICO era that I don't think it's a space for them even to consider today. We have been talking to MAS here for a few things, and I think it's too early to even waste their time, to be honest. But yes, as more and more retail gets involved and more complaints start to come in, you will have some eyes on it. But it's a slow moving elephant, and mostly rightly so, because they have to they cannot keep a wrong foot anywhere. They cannot step wrongly anywhere. And they have to keep the retail guys as top right in their minds. So I personally don't think of DeFi regulations as of now.
Maybe self-regulations. Oh yeah, Zhenya, go on.
Yeah, because being a founder of the company in the DeFi space, I have to comment on this. So first of all, my personal take on this is that I don't think we're trying to stay away from the regulation. And not every company is just trying to avoid, and it's not in their plan to always stay outside of the regulation. I think there are a few problems at the moment. So first of all, it's actually very hard right now to understand what kind of regulation you're falling under. And because of there's no, as Lisa mentioned, there's no international standard or anything, you kind of have to comply with, every single regulation out there if you want to stay completely compliant. And that's like really impossible for most of the companies. And that's why I think for a long time, DeFi is going to stay in this gray area, and this local arbitrage of like compliance arbitrage is going to stay. But over the long period, I think DeFi is going to be quite easy to regulate. And looking at like how all of the transactions are actually on the smart contracts, you can see the way how we can like easily do the KYC on chain, how we can mark certain coins being like eligible for trading, certain accounts eligible for trading. So all of that it is not hard to imagine. But I think we're going to get there. But as everyone I think agrees, is that all of these regulators are very slow to move. So and I also like the last thing I wanted to note here is that I don't think they're trying to stop the innovation. So that is like one of the priorities they have in mind as well. So I'm trying to think of them as like helpful in the longer run. And I think we should work together in the space to get them on board and help them regulate the space rather than prohibit innovation.
And what about the self-regulation then, the governance? We're talking about the ecosystem here. Why doesn't the ecosystem take the step here, right, and self-regulate?
It's an interesting one. Yeah, one example that came to my mind is like UnionSwap tokenless, if you have seen these ones. So I think that can be considered as an attempt in that direction. So having other companies vet different tokens so it's safer for retail to trade. I think that's valuable, but it's, again, looking at the space, if we are in the beginning, like if you take the analogy of DeFi being the internet of finance, it seems impossible to self-regulate that from within, just because of like the number of people being involved, number of malicious actors in the space and in the world. So I'm not too sure, but I think companies separately can try. So like we're trying ourselves to make the safest experience for the users.
Well, I will go in the nerdy way and tell you about the economics way of regulation. When it comes to economics of a system, it can be split into three different pillars. The first one is market design. So the design of the environment in which participants and tokens will interact with, and it's really constrained. So that's how you define, that's where the boundaries of your economic system are. The second one is mechanism design. So design of the rules of the game. This is exactly where governance comes in. Imagine if you play computer games, there's always different kind of boundaries or different kind of prompts by the machine or by the game itself. And these are different forms of governance. So in governance, you have decision making, you have when something happens, when conflict happens, how do you resolve that? You have voting mechanisms, because one person, one vote doesn't really work. Majority vote doesn't always work. It's not the most robust system. It's not the most efficient system. And in economics, the idea about governance is not just you should govern, or machines should govern, or humans should govern. It's more of, what is the purpose of governance? What are the things that we want to achieve with governance? Are we looking at maximizing individuals' utility, like individuals' greediness? Or do we want to look at maximizing social utility? So as an ecosystem, how do we maximize the best benefit to everyone? And some people will get a bit less, but in general, everyone gets marginally quite equal. So that's where it becomes a bit tricky in designing or creating these kind of ecosystems, because what are you trying to govern? What's the objective of governance? Then from there, you can start breaking governance down. How do you govern it? What kind of incentives do you want to do? How do you align all these different people, different participants who want to optimize for different things? How can the token optimize for that? How can the tokens align incentives together? And this becomes very important. Governance is absolutely very important. And if you look at the trend that we're going, governance token now becomes a new asset class, because it combines kind of a bond, which is a fixed income returns, together with an equity, because now you have ownership of a company or of this protocol. And governance token tries to bring these two together, that is embedded in code in the system, and then allowing individuals as humans to be voting or to be making some changes at a human level. So if you think about it, it's that the execution is done by machines and the big macro decisions are done by people. And governance token is trying to merge these two, human and digital world, together and trying to get the best outcome for an ecosystem. And that's where it's super, super exciting. And that's where governance token is very interesting. There's a lot more to consider than just YFI is going to pump like crazy, or UnionSwap is going to be the best ever because Uni token is rising like crazy. It's a lot more than that. There's a lot of engineering and economics concepts that goes into governance token, and we are just scratching the surface. We're still experimenting, and it's going to be a very exciting 2021.
Lisa, I mean, it sounds so beautiful when you describe it and explain it. Really. Okay, if anyone wants to add to that, please go ahead. If not, I would rather move to, well, we discussed regulation, but also here, I would love to touch the topic of user protection, right? Because of the decentralized nature and because of there are no rules there yet. Well, some of the basic rules we have, some of the macroeconomic laws are still applicable here. But still, what about the user protection? What about a consumer protection? There's no regulator that would say, I'll take care of you. No, everyone takes care of themselves. Thank you very much. So what is the solution here? Is there, or is there a need for this solution? Anyone? Sankalp, we need to shake you a little bit. Go on.
I think that the short answer is there is no need for a solution per se. Like Yevgeny said, I think most founders who are actually building great product and great technology for the long term, they themselves know how to or why to regulate their teams, regulate their product, and be inside the regulation and not do something stupid or crooky, or as they call it, pull the rug. in the DeFi world. So in a way, these are very, very smart people who are here to build something for the longer term. So per se, there is no need, but obviously there will always be some bad elements who will kick in as the yields grow and prices grow, and like every other historic phase of the society. If you go back 500 years from the Dutch guilder to the British pound to the US dollar to the Bretton Woods and the 1971, etc., etc., there were always bad elements. So regulations will come, but too early.
Anyone else? Anton?
Yeah, I'm happy to provide my input on that, and I think it goes in line in terms of self-regulation and why it's, I think, on my side personally, not suitable for the DeFi world is because the DeFi projects have a very poor track record of self-regulating themselves. And in that sense, I think it's not feasible. And it's just like if I have to reflect how flovtec deals with DeFi projects and how do we select the right partners, is actually we have to be aligned on the values. And our values is, that it's the customer is first, we're transparent with them, we always work in their best interest. And if the partner actually shares the same values as we do, then we decide to work with them. Now, isn't this a bit ironic because we're talking about code is law, we're talking about software, we're talking about something that runs without any interruption, no matter what happens. But it turns out that an approach with a proven track record for flovtec is actually to find and partner the people who share the same right values as we do. So for me, this is a bit of a conflict, to think actually that, we're talking about code, and on the other side, the partners are chosen, do we share the same values or not? Which is, again, a bit a more provocative statement anyway for this panel.
And a bit more philosophical issue, I guess, rather than, a question of governance. Which brings me to a follow-up question. If, let's say, when the ecosystem matures, do you think that it will have the consequences of, let's say, a dot-com boom? Will there be companies like Facebook, Amazon, DeFi, Google, anything? What are the prospects for that?
I'm happy to jump in here. So
sure.
First of all, touching on the dot-com boom, I think we've already seen one with ICOs, and we're probably going to see more with the DeFi space. I kind of think of DeFi being just a more general term for for everything that was going on. So as Sankalp said, there were like different parts of it, but I think like all of them are kind of connected. So DeFi is in a sense the ultimate name for all of that evolution of the technology that has been happening here. So like in my view, tokens and even like base layer crypto are part of DeFi, and like you can argue with that, but in general, I think that's how I see it. So talking about the bigger companies like Facebook and Google, I definitely think that this technology can bring new companies of that size. And if we just start thinking, like currently it seems really like unrealistic looking at how small DeFi is, how complicated it is to use, and just in general, how like little liquidity there's out there. But we should just keep in mind that it's been like for the DeFi space, for all these two protocols, it's been just 2 years, and it grew remarkably, and the number of evolution we've seen is like unlike we've seen in the fintech space for many years. So I think it's definitely going to be the foundation layer for some portion, like a pretty big portion, and eventually I think all of the financial interactions. And there's definitely space for companies like Google and Amazon, that each of like these can be found in terms of what kind of use cases we see in the DeFi space. So I believe like looking at Zerion, we sometimes refer to ourselves as the Amazon of DeFi space because we are the marketplace. And of course that, it's a bit of a stretch at this point, but looking at how aggregators are like essentially evolving and the use cases for aggregators and the potential that they have, I don't think it's hard to visualize.
Interesting.
I would just throw in one thing. Bubbles will always exist. our traditional financial market or capital market is really so mature. But just 10 years ago, there was a bubble on housing. And today, is Tesla a bubble? Are all these fintech or FANG companies bubbles? You know, they will always exist, and bubbles just inflate and deflate. Sometimes they burst, sometimes they don't. And it's about managing them. The illusion that we have in economics is that there's always a steady state. There's always an equilibrium, which the demand and supply cross each other. And there's this point that will always be the perfect solution for everything. But the thing is, life is not like that. Life continuously changes, and we just have to adapt to that. There is no ever perfect state. The only perfect state is when we are all dead. So that's what they always say, in the long run, that's where all these equilibrium happens. But we'll never be there in the long run. So you just have to manage the bubble. Just make sure that it don't get overinflated. And when it deflates, it gets reinflated again. That would be a good balance.
That's a good balance though. Right, Sankalp?
Absolutely, absolutely. I'm, you guys have covered everything. I have nothing to add on the top of that.
Any unicorns you're seeing ahead of you?
Yeah, on my side, I will just add, how early is not only the DeFi space, but blockchain in general, is that everybody's still focusing on the protocols. If you kind of think about it, the equivalent of that is everybody focusing on the TCP/IP protocols that support the internet that nobody today cares about at all. So I think kind of we are at that super early stages where, it's still thinking like, how does this even work? How does it scale? And only once we have that in place, where this is a solid foundation, then we can talk about the Google, Amazon, or Facebook equivalents, which will actually be products on top of the protocols. They won't be the protocols themselves.
Totally. And just to add to that, 50% of the so-called yield farmers do not know what yield farming is. So it's that how early we are. It's just the money maketh you go around.
No one knows what yield farming is. Seriously. Okay. That was a great point. Thank you so much. It sounded very, very optimistic, yet very educational, I have to say. But that's, I guess, because of the very diverse and interesting backgrounds of our panelists today. As much as I love those 1-hour panels, it all comes to an end eventually. And I want to thank everyone for this insightful conversation, for this very, again, educational panel. And thank you for being with us on that DeFi Day. Thank you for attending Hong Kong Blockchain Week. And I hope that 2021 will bring us more great news in every space, including DeFi space. And I hope that we'll get rid of that travel ban and eventually meet physically in Hong Kong next year. Thanks, everyone. Awesome. Have a good rest of your day, night, and I'll see you soon in Hong Kong. Thank you.
Thank you. Thanks a lot.
Thank you.
Thank you, everyone.
Thanks.
Bye-bye. Thanks, everyone.